University of India, Berne. I welcome all of you to this webinar on opportunities in Indian information technology sector today. Information technology is today functioning as a multiplier for various human efforts and endeavors with quick transmission of information. The human civilizational edifice is built on the ability to exchange information. It has been in place since times immemorial. In the ancient world, Roman writers and encyclopedists such as Celsus, Scribonius Largus, Pliny, and Dioscorides made several references to Indian medicines and herbals. Varaha Mihira, the polymath living in 6th century India, used many Greek technical terms in his astrological work Brihat Jataka. The Vashishta Siddhanta, summarized by Varha, has shades of Babylonian influence. Today, the Government of India has identified the information technology as one of the 12 champion service sectors. India has become the digital capabilities hub of the world, with around 75% of the global digital talent present in the country. The government is running the Digital India program with a vision to transform India into a digitally empowered society and knowledge economy. The government of India has undertaken a number of reforms for further easing the ease of doing business and also for further integrating a self-reliant India with the world. Today's webinar is a step in this direction. India and Switzerland are long-standing dynamic partners. The MISSP program is being run by the Embassy of India, Berne, for further enhancing the links between the Indian and Swiss business ecosystem. I'm happy to note that in the last 6 months, more than 50 Swiss companies have onboarded on this program. Today, our presenters will include the knowledge partner of MISSP, T&A Consulting, the legal and tax partner of MISSP, Rotterdam Partner, and also guest speakers from the from the Electronics and Computer Software Export Promotion Council of India. So with those words, I would request the first speaker of the day, Mr. Tarun Gupta, partner T&A Consulting, to please come on screen and make his presentation on the overview of Indian economy amidst the COVID-19 crisis. Mr. Gupta, please go ahead.
Thank you, Dr. Singh. Good morning to all our participants who've joined us from Switzerland, and good afternoon to all our attendees from India. Thank you for taking time out for this webinar. Yes, we live in challenging times, and as one wise person said, every challenge presents an opportunity. The current pandemic will result in new business models, in new business partnerships. Can India be the preferred business partner for Switzerland? What are the opportunities in India? The challenges? What is changing in India? What has changed in India? The aim of this presentation over the next 12 minutes would be to give you a balanced view of India and not the Bollywood version. I'm also very familiar. Since the time of pandemic and lockdown, there have been a host of webinars and PowerPoints and use of cliches like new normal. We will try to keep this presentation simple with some key messages. So let's begin. How would you describe India? I would describe India in 4 Ds. Democracy, demography, diversity, and disparity. Democracy, the world's largest democracy. 900 million people were eligible to vote. 600 million people voted. However, the democracy can be chaotic. The decision-making can be delayed. Demography, very relevant to today's topic. Our median age is 29. We have nearly 70% of our population within the working age group of 15 to 65. In fact, even in the current pandemic, only 7% of our population is above the age of 60. And we will account for about 1/5 of the global workforce. However, there is a challenge as well. Every month on month, we will add the population of Switzerland to our working population. That means we need to create jobs. Third D is diversity. We are proud of that. Diversity in religion, diversity in our eating habits, diversity in our languages. We have 22 official languages. There is more diversity from North to Southern Europe than, there's more diversity in India as you move from North to Southern Europe. However, from a foreign company perspective, India cannot be viewed as one unitary market. And finally, disparity. Yes, that's also true. 1% of our countries, top 1% control 60% of the wealth. Top 10% control 77% of the wealth. Even the economic development across states is not uniform. There can be a difference of up to 10x. So these are the four Ds. But one important aspect, if you see on the right side of my slide, is India is the only country which has moved from agrarian to services. And we are proud of that. In fact, I will talk later how our IT sector contributes 8% of our GDP, but only employs about 1% of our total working age population. So what is the message here? We need to get our manufacturing also right. So what's our vision? Our vision is to be a 5 trillion economy by 2025, of which we need 1 trillion to be a digital economy. And really ITES sector contributing up to $350 billion. That's our vision. To be a 5 trillion economy, what do we need? We need a real growth rate of 8%. Is it ambitious? Very, very ambitious. It took us 60 years to reach 1 trillion. And it took us about 7.5 years to reach 2nd trillion. And now we need to double our GDP growth rate in the next 5 years. So what does it need? It needs a virtuous cycle of savings, exports, and investments. So how are we doing on investments? In the last 70 years, we've got about $600 billion of investments, foreign direct investments. Nearly 50% of that has come only in the last 5 years, of which 90% is through the automatic route. What it means is no government approval is required. And why that is relevant? You do not need a local partner necessarily in most of the sectors. You don't need to share your intellectual property. You do not need to share your trade secrets. India has been ranked as the 3rd most preferred greenfield destination. And why is that? Well, you look at the current slide. We have shown a huge improvement in ease of doing business. We have moved up 79 positions. We are consistently amongst the top 10 improvers in ease of doing business ranking. In fact, nowadays there is a new term. We have all heard of BRICS, a new term called MIVIT. Malaysia, Indonesia, Vietnam, India, and Thailand. And these are the countries which are competing as companies look to move their supply chain. How do we stand amongst them? If you look at all the parameters, building permit, getting electricity, we stand very favorably. But one thing which is different is our domestic market. We have a very large domestic market. In fact, that brings me to the second part of my presentation. First part was about India, the 4 Ds, the vision, and the ease of doing business. The second is about India opportunity, and that can be put in 4 alphabets: consumption, formalization, infrastructure, and digitization. So let's move to the first letter, consumption. India is a consumption-driven economy. 60% of our GDP comes from consumption. We are not export-driven economy. And our consumer market, which is currently the 6th largest in the world, is expected to become 3rd largest in the next 10 years. In fact, our whole private consumption expenditure is expected to increase by 4 times to 6 trillion. Word of caution: a lot of companies overestimate the size of Indian middle class. If a lot of companies assume 1.4 billion people, wow. Realistically, if you look at the pyramid, we have about 10 million households, annual household income of over $30,000 plus. That's the same as Western Europe, purchasing power. Then we have another 25 million households between $15,000 to $30,000. So really, middle class is this 35 million households, which is about 175, 200 million people. It's not small, but it's not 1.3 billion. So first C is consumption. Second is formalization. And what do I mean by formalization? Let's step back. India has 75 million enterprises, which is nearly 22 times the number of enterprises which is there in the US, which has 8 times our size. However, out of the 75 million, only 10 million have any kind of tax registration. In fact, only 5 million have both tax and social security. So what are the implications? A, it impacts productivity. 85% of all manufacturing firms have less than 50 employees. In fact, the unique challenge in India is the firms remain small. In fact, we have classified them as dwarfs, are companies which are less than 100 employees and older than a decade. They impact productivity negatively. Instead of dwarfs, what we need are babies, companies which grow up into adults. Second is we need to improve our tax to GDP ratio, which is at about 17%. Less than 6% of our population pays income tax. Tax GDP ratio, even of other emerging economies, you look at China, 22%, South Africa, 27%, Brazil, much higher. And third impact of formalization is sanctity of contract. India is not ranked highly in enforcement of contract. To get better debtor discipline, we have signed bankruptcy code. And first time in India's history, companies have been liquidated. Third is infrastructure. This has always been a problem area for a lot of foreign companies, which has impacted productivity. We have invested. If we have to be a 5 trillion economy, we need to double our infrastructure spend from about $150 billion to about $300 billion. And there are all sectors. I can give you examples. Roads. We have a national highway length about 140,000 kilometers. 30% has been built in the last 5 years. We plan to build another 60,000 kilometers in the next 5 years. So effectively, we would have doubled our national highways in the last 10 years. Railways, we have electrified 30,000 kilometers of our total track length of 68,000 kilometers. But now we want to do entire electrification in the next 5 years. Power, our solar installed power capacity has increased by 1,000 times. Ports, our whole turnaround times of ships has reduced from 4 days to just over 2 days. We are still making efforts to improve it further. So, and final D of India alphabet is digitization. This is relevant for today's topic. India stack is a unique thing. This is the game changer for technology inclusion in any part of the world. What it is the concept of presence-less, paperless, cashless. We are aiming towards a holy trinity, which is 1 billion people on biometrics, which we've achieved, 1 billion mobile there, and 1 billion bank accounts. In fact, in the last 6 years, we have opened 385 million new bank accounts. And why it is important? I'll give you a couple of examples. All the government's benefit schemes is moving directly to the beneficiary, cuts down on leakages. We have leapfrogged from credit cards. In 70 years, we had 50 million credit card holders. But now, in January, we had over 1 billion unified payment interface transactions. In fact, Google has written to Federal Reserve that a similar system for USA could be useful. Bank of International Settlement is all praised for our unified payment interface system. And why we've been able to do that is sheerly the growth in the number of mobile users, which are currently about 600 million people use internet over mobile, and our data usage per person is the highest in the world and has increased by 44 times. So I spoke about India opportunity, consumption, formalization, infrastructure, and digitization. Of course, if there's an opportunity, there's a small matter of taxation. Now our taxation rate has been reduced dramatically. We are looking at net effective tax of about 25% for new manufacturing, about 17%. But more importantly, Indian tax authorities were infamous for litigation. Now we have signed 300 advanced pricing agreements to offer predictability to the foreign investors. We have also reformed our indirect taxation system. India was a challenging market, but now what we have is a goods and service tax. Of course, it's work in progress. It will improve further. But what it has done is it's improving our logistics. We want to reduce our logistics cost from 14% of the GDP to 10% of our GDP. Our warehouses are getting bigger by 10 times. We are cutting down on the lorry. So with that, I move to the end of my second part of the presentation, where we spoke about India opportunity, CFID, and the reforms in taxation. And now finally, I move on to what are the reforms. And here I can describe in 4 letters, the 4 L's. First is laws. We have repealed 1,000 laws. We are bringing about everything on system transparency so that manual intervention is reduced. The second L is, and this you can see in terms of the cost of compliance, is coming down. The second L is really liquidity. We are not offered handouts to companies, but we've said small enterprises could take in collateral-free loans. We are also looking at offering the reduction in the bank rate. And that brings me to the third L in India, labor laws. I know my following speakers will talk about, but essentially we are reforming 44 odd central laws into 4 labor codes, which are based around wages, social security, industrial relations. That has been a big challenge, labor reforms. And finally, the most difficult one is land. In India, land has been expensive to acquire, time consuming, non transparent, but now we have an online system wherein approval, we have land registry. In fact, if you look at the slide, we have 44 industrial clusters and nearly 2 million square meters of industrial space ready for purchase in 8 to 10 weeks. With that, ladies and gentlemen, I come to the end of my presentation. Thank you for your patience. And I summarize once again by saying India is 4Ds: democracy, demography, diversity, and disparity. And we spoke about India vision and ease of doing business. Second, we spoke about India opportunity, CFID, consumption, formalization, infrastructure, and digitization. We spoke about tax changes. And finally, the 4 L's of reforms: laws, land, labor. And thank you so much for your patience. Over to you, Dr. Singh.
Provided us a good foundation on which we'll take on the webinar further. We'll come back to you for another presentation. Let me just tell the audience that on the upper right screen, right side of your screen, you'll find handouts pertaining to the IT sector. We'll also be initiating a poll. You may like to participate in it. Let me now move on to the guest speaker of this webinar. The guest speaker represents the Electronics and Computer Software Export Promotion Council of India. The guest speaker we have today with us is Mr. Mandeep Singh Puri, CEO, FutureSoft India. So he would be providing us a perspective from the industry side of the Indian information technology sector. Mr. Puri, may I request you to please switch on your camera, come on the screen, and make a presentation. Thank you.
Hi. Thanks a lot for this opportunity. Is my presentation visible to everyone? Yeah?
Yeah.
Okay. So hi, thanks a lot for this MISSP initiative and this opportunity given to Electronics and Computer Software Export Promotion Council. I'm Mandeep Singh Puri, and I've been a past chairman till recently of ESC. And I'm also CEO of FutureSoft India Private Limited. We are a 31-year-old company set up in 1988 in India with a focus on software and software solutions. So I'll be taking you through, just a couple of slides as talking points, and then you can ask questions, and I'll put some perspectives also there. First of all, let me just talk about ESC a bit. India, as from the last presentation, you've seen that India is pretty wide, and it has a lot of companies, it has a lot of areas, a lot of so-called, we can say, core competencies in those companies. So how do you find the right partnership, and how do you stitch something which is good as SME? I've gone through that, your country, 95% plus companies are under 250 employees, which qualifies as a SME. So 95 plus percentage of companies are SMEs. And it's just that how to start engagement with companies in foreign country like India. So ESC helps you stitch the best breed of assets for your customer. It's a platform between Government of India. It is the platform between the industry and buyers from other countries like yours. It is not only buyers, it is also forging partnerships. So that's something which is pretty important here, where you would have certain core competencies which are missing in India. There could be markets in India which jointly through partnership with our members can come to fruition and can come to reality, which could be beneficial to both the Indian counterpart and your company. We manage trade leads and distribute them. We do business matchmaking. We organize India Soft and Global Soft. As we come closer, probably we'll send you the invites. We do buyer-seller meets These are now mostly webinars. We also have an incubator. So in case you would like to set up something and you would like to be incubated or do a soft launch by putting 1 or 2 people. So ESC has a ESC house in heart of Delhi, in South Delhi, and we do have capabilities where we can lease out something to you in a very quick and easy way and get you plugged and working uh, within a day. Well, let's talk a little bit, shift gears, talk a little bit about the IT software services exports. Well, the IT software is a darling, as in the previous presentation also it was pointed out. We contribute to the GDP marvelously. And the growth of IT sector, especially software and services, has been growing. So last year we had $142 billion of export, which we did from India, and that has been constantly growing. And let's see as to how this year fares for us. It may be flat, it may be negative, it may be positive. There are whole kinds of projections, but we'll wait for the year to end and see as to what projections come true. Well, this is how the slice can be, put into different areas. India is a vast country. Many of you may have certain preferences. Some of you may not have any preferences on what geographical area of India would you like to focus on. South definitely contributes, Bangalore or Bengaluru contributes, which comes as Karnataka out here, contributes about 44 billion or 37% of our export turnover. Tamil Nadu, which is Chennai, down south, contributes another 17 billion. So in all, there's a 82 billion which comes from south of India. East of India is comparatively smaller numbers, which is 3 billion. And north contributes, which is the capital Delhi, and we call it NCR, which is Gurgaon. You may have heard of this name, Gurugram. You may have heard of Noida and Greater Noida. All this comes here, and as far as the IT exports is concerned, it contributes about 15%, 18 billion. And Maharashtra, which is Mumbai, Pune, contribute about 17 billion. So this is how the share is, and it'll help you in choosing as to where to go. So I come to the slide where, these are technologies of today, and these technologies, I've shuffled them a bit, especially post-COVID. Well, we would see a lot of opportunities in this. And as SMEs, you need to also look at them. In your country, tourism is one of the most important contributor, services, most important contributor. You have great companies. I mean, Futuresoft works with 2 companies, Nestle, which is your largest employer in your country. We have been working with Nestle for past 25 years, and we do a lot of things with them. We also work with Dorma Kaba, which is a brand which does automatic glass doors. So we've been working with them for past 2 years, and both requirements are quite distinct. So I'll interlace my discussion with a bit of anecdotes or bit of examples from these. Well, artificial intelligence, I don't need to define artificial intelligence, but more and more it is like becoming our real intelligence, where humans and artificial intelligence, AI, collaborate together to create a better and faster decision making. So India is definitely a hub of that. You can find a lot of resources, services. With ESC, we have 2,300 plus companies, out of which at least about half of them are software and IT companies. They are running businesses, they make profits. So what happens is that they are run by entrepreneurs, and they understand, they have the business sense, and they understand your requirements and stand on their heads to deliver quality to you. So, I mean, you can utilize the artificial intelligence capabilities which we have in India for your benefit as you scale it up. Well, what we also see is that the cloud and app modernization is something which is going to be really, picking up after COVID. A lot of apps which are on-premise would need to move to cloud. There is app modernization which needs to happen. And as SMEs, these are certain things. You may get orders from others. You may have your own inbuilt apps which you need to migrate. And India can really help. Futuresoft itself, we've been working with cloud since 2012. We've been really doing migrations and putting things on cloud. So besides Futuresoft, there are 1,000+ companies which we can put you across with who have these capabilities. Blockchain is a focus area. Futuresoft, we talked to one of the companies in your country, which is a startup and doing marvelous work in blockchain, especially on consumer products like cosmetics. So I mean, if you have a spillover or overflow, India itself has a lot of capabilities on blockchain. Robotic automation, we work, BFSI is a focus area. Banks and insurances is focus area of Switzerland and in India also. So say a company like Futuresoft draws about 60% of its turnover from BFSI segment, which we work with banks, many international banks, which give us diversity of work, and robotic automation has been one of them, which is could be voice recognition to speed up things when a agent receives a call from a consumer, or it could be a RPA where monotonous things like processing of images or processing of documents or changing your passwords or even more complex aspects of IT automation can be taken care of by robotic automation. Robotic automation to a consumer company is also chatbots. So when you own those chatbots, it requires a lot of effort to build new and latest information into it, and also go through reams of information which you already have in past your FAQs and make them friendly for chatbots. So this is something where you can come to India, you can come to any of the companies here. Phygital, physical and digital is combining together, especially so since like Nestle, you have a whole lot of other companies who are dealing with consumer items which you provide. They have their stores, they would have their centers where somebody can come and experience, and we can do a lot of companion apps. We can do a lot of automation of digital out there where a person can choose in a physical store and can go home and buy it, or vice versa. Data management goes without saying, it's so important. Dreams of data. In 1 year, we are creating more data than the data which we've created through a lifetime. So a lot of services around data management, big data are available in India for your taking. So, I mean, this is a brief snapshot what I did. As ESC, we are always welcoming, and we have, as I said, more than 1,000 software IT companies members, large companies, a lot of SME companies, which we call as MSME, are part of our, fold. We are there to help you in any way. With Nestle, for example, Futuresoft has been working for 25 years. We started first with doing their complete automation of sales from a distributor to their branch office, to their head office, and to Vive, which is their headquarters, sending that sales information on a daily basis to them. Later, they took up Globe as the SAP, largest SAP project. So now we are doing a lot of bolt-on and services, some AI development for them. As far as Nestle is concerned, we also do some milk disposition system, which manages the recipe at the factory. We with Dorma Kaba, we help them with their catalog. We help them with augmented reality. When they are creating some new product, that product can be simultaneously seen by various stakeholders sitting in whichever countries which they are sitting in. So, I mean, we work especially a lot of it on sales, on catalogs, on working with banks, providing them cash management systems, automation around it, and RPA. So these are some of the things which I wanted to point out here, and I hope this bit was a bit helpful to you. And if there are any questions, I'll be more than happy to take them. Dr. Singh.
It was a fabulous, comprehensive presentation, including your anecdotes and also the opportunities which are available, in the Indian IT sector for Swiss companies. Thank you so much. We'll come back to you again during the Q&A session. Your presentation has actually made our job much easier in providing an overview of the Indian IT sector. So now with those words, let me now invite the next speaker,
Sure.
Mr. Karan Gupta, partner TNA Consulting, to please make a brief presentation on opportunities in the Indian IT sector. Thank you.
Yeah, Dr. Singh, absolutely. My job has become much easier. And so I hope the audience doesn't mind if I skip through a few slides. Okay. So this is my favorite topic. I could go on this sector. But this sector has really been the torch bearer of what Made in India is, right? What it stands for. So if you look at the figures, right, we are talking nearly $150 billion of exports. More importantly, this industry alone has created incremental revenues of $100 billion in the last 10 years. It has got new FDI we spoke about FDI, $50 billion of FDI in the last 10 years. Today, we have 27 unicorns, and there's a new term called soon to be unicorns, Sunicorns. And we have about 50 soon to be unicorns. But I'm proud of other aspects as well. IT industry today has women empowerment at its forefront. Nearly 1/3 of the entire staff of 4.5 million people who work in this industry are women employees. And revenue per employee also has increased to over $40,000. If you notice the geographical split, US continues to remain the biggest geography. And as Mr. Singh said, banking and financial sector account for about 40% of the overall top line. In fact, Indian IT companies have been so customer centric, they have set up 780 or more than 780 offshore development center which follow the customer approach. So on a high level, this industry has shown tremendous growth rate in the last 10 years. How is it split? If I break up this industry, I would break it up into 4 broad segments. First is IT services, ballpark about $100 billion. And then is engineering R&D, about $40 billion. Business process management, about another $40 billion. Hardware and e-commerce. But there are 2 or 3 macro trends. Number one is the revenue from digital has been increasing at 25 to 30%. And also it accounts for nearly now 1/3 of all the IT revenues. That's a big change. Second, if you see, out of these 4 segments, this industry is now moving into 9 new technologies. What are those technologies? 3 are foundation technologies, which are big data, cloud computing, and cybersecurity. Plus 6 are more advanced technologies, which are artificial intelligence, blockchain, IoT, 3D printing, robotics, and immersive media. When I say immersive media, it means augmented reality and virtual reality. And what has the impact of these 9 technologies in these 4 segments? IT services, driven by cloud services. Business process management, as Mr. Singh mentioned, higher implementation of chatbots, robotic process automation, AI-based automation. Engineering R&D, this is driven by digital engineering, better user experience, personalization, IoT, and Industry 4.0. And finally, software product, which I will talk later, is driven by software as a service. And e-commerce, where we are seeing 25% growth rate and very growth of niche verticals like grocery, food, and pharmacy. Moving on, here I have 3 key important messages on this slide. Number one is we have 11 companies who have a top line of over $1 billion. We have new companies emerging who have a top line of about $100 million. We have on-site revenues which have increased to 60%. Second, very important for today's audience, is our growth of the global captive centers, where we have over 1,500 global captive centers. They are not only based on cost leadership and service excellence, now they are based on innovation. In fact, a lot of R&D is being done. You have OnePlus, Mondelez, Intel, all have opened their R&D centers in the last 2 years. In fact, Microsoft's product Kaizala was a made in India product which has been taken globally after India testing. And the third message here is the startups. In the last 10 years, we've nearly seen over 9,000 startups. We've seen close to $5 billion of funding only in the last years. And 20% of these startups have global market on their plate. They are not focused only on the Indian market. And finally, startups is something where most of them are looking to go global. And you also see the number of patents which is being filed. Moving on, how is the industry outlook looking? See, banking financial services has been the driver, but there are two or three other verticals. Number one is manufacturing. Number two is healthcare. It used to be travel and tourism, but of course, for obvious reasons, it will be facing a challenge. The other growth vertical is telecom sector now because of the 5G implementation. In fact, there are 150 centers of excellence being set up in India, and these are focused on IoT, AI, cognitive, and mobility. So the customers want to show their capabilities and build a culture of innovation. The second opportunity, which is on your right, is data center outsourcing. Currently, this market is about 2 billion. It's expected to grow to $5 billion by 2024. If you look at our domestic demand, there are 1,200 about listed entities, and they account for 1/3 of the spending. And then a lot of their spending is going on digital transformation. Which brings me to the next slide, which I spoke earlier about software as a service. This is a growing area. India has become a hub for software as a service, especially related to artificial intelligence and machine learning. And we have already 3 unicorns there and nearly 10 soon to be unicorns. In fact, there are products which are used in Switzerland on cloud protection by one of the unicorns. And the model is also changing. A lot of subscription model is moving to gain share model. Indian SaaS firms tend to be more wider rather than one vertical offerings. And finally, we are seeing some software firms with annual revenue of 5 million, $3 million emerging. These are not only the smaller companies. Next, this gives you an idea on the investment opportunities, and no surprise that software as a services has provided the biggest opportunity here. Here, I would like you to mention what is known as a flywheel effect, what we are seeing in the Indian startup environment. I take the name of Zoho, right? This company created 20 more startups by its employees, which resulted in one more unicorn, which in turn created a 14 more. So really, we are seeing a flywheel effect. And if you look at the investor space, today there are 150 startups founded by serial entrepreneurs. There are 55 startup founders who've actively invested in more than 3 investments. So clearly, we are seeing maturing of our startup ecosystem. Moving on, what are the geographical hotspots? Mr. Singh mentioned. Here, for me, the key message is yes, Delhi, Mumbai, and Bangalore continue to account for disproportionate share. But we are seeing now tier 2, tier 3 cities focused on, for example, Indore, focused on mobile applications around education. Jaipur in North India. So we are seeing some centers emerging which are focused on very, very specific and niche areas. Government policies, of course, they've been a major support. We plan to improve our share in the global software market by up to 10x by 2025. That's the scale of our ambition. One area where we are working is on future skills program, because it's clear that under new technologies, a lot of skills will get outdated. And the leading industry body, NASSCOM, is working with our skills program called the Future Skills on this initiative. Moving on, here I would like to mention, if you're looking to set up in India, the software technology parks have been a big success. There are about 60 STPI centers, even in tier 2 and tier 3 cities, where you have 5,000 units, and they account for nearly 50% of all our software exports. For larger companies, we also have special economic zones. These come in with all the usual incentives, so to offer you plug and play facility. I'm going to skip through these hardware slides, but hardware is area where we are seeing significant improvement, and we plan to increase the size of our electronics production from $100 billion to $300 billion in the next 5 years. A big success has been our mobile story. Now we have become the second largest assembly of mobile handsets, and we plan to produce up to 1 billion handsets in the next 5 years, of which 600 million will be for exports. A quick comment on some of the India-Switzerland case studies. Infosys recently tied up with Avaloq Wealth Management to help their clients into digital advisory platform, and they would be taking this platform not only to Switzerland but to other markets and offer these services as software as a services. And Infosys experts are also on Avaloq platform. Wisely, you can see they have taken part in the Indian agri-tech story and used AI and blockchain to support their global projects. They have a center of excellence in India. And my last two examples is Securiton. They have a center in North India, in Gurgaon, a suburb of New Delhi. And this company, this center executes all their software development across the software development cycle. Then we have another company, Colair, which has a subsidiary in Pune, Western India, called Web Conversation. And they are looking to build social interactive Web 2.0 environment and also virtual places for enterprises. With that, I come to the end of this part of my presentation. Over to you, Dr. Singh.
The next section of the webinar today, which is a presentation from the legal and tax perspective. The presentation is being made by the legal and tax partner of MISSP. The presentations from Gaurav Makhijani and Ms. Ritika Arora. May I first invite Ms. Ritika Arora to please come and make her presentation from the legal side. Thank you.
Thank you, Dr. Singh. Good afternoon and good morning to all the attendees here. And thank you to the esteemed panelists for giving a wonderful overview of the information technology sector. With this, I would like to take you all through some legal facets which need to be borne in mind when any kind of investment is being planned in India. Now, first, of course, there are various entry options that are available as per the foreign exchange laws of India. What you have in front of you is a slide which captures the several options through which an entity can enter into the Indian market. Of course, the pros and cons and also the investment type needs to be weighed in when arriving at a suitable entry model. For example, you have an option of a LISO office, which primarily is an extension of your head office. So having a LISO office does not allow you to conduct any business in India. You're only acting as a communication channel over here. Then there's an option of a project office, a branch office as well. Then coming to forming an incorporated entity, what we see is that private limited companies is one of the most opted for model of here. There are several compliances, but you can have a full scope business model in place. So this is one of the entity model that is quite preferred. So with this, another thing that needs to be borne in mind is a recent change in the FDI policy in the wake of COVID-19, wherein for all sectors of the for having FDI in place, then and for if the FDI is routed through a country which shares a border with India, then you need to go for a government approval. So this is one thing which needs to be borne in mind when an investment is being planned, so as to have a proper structuring option in place. Now, the next slide here gives you an overview of course, India, as was also spoken by the other speakers. India is a land full of laws. But here we take you through some of the specific laws with respect to the IT sector, as well as other general laws which would govern any kind of business that you have in India. So firstly, for setting up, now we have a centralized and digital process. Here we are talking about setting up of a private limited company, which is one of the most opted for models. There is an option of a fast track incorporation, and your tax registrations can happen in parallel. As when you're setting up of the entity, it can happen in parallel. Now, opening of a bank account is fairly simple these days. And one thing that you need to bear in mind is there are specific registrations for setting up of IT sector. For example, for setting up of a BPO sector, there are some registrations under the telecom authority which need to be taken. So these are some registrations specifically which will need to be analyzed when an entry model is being looked at for the IT sector. Now, of course, 100% FDI under the automatic route in software IT industry is now provided for. The laws specifically talking about the IT sector is the Information Technology Act of 2000, read with relevant rules. Another issue is the draft Personal Data Protection Bill, which is in the pipeline. Now, this is modeled around the GDPR law. In a sense, in fact, it is far more compliant and it is far more stringent than GDPR. So this is one positive development, and we anticipate that this bill will come into an act form very soon, probably in this year itself. Then there are some state-specific information technology policies offering various incentives, and depending on the location of your investment, these policies will need to be looked at. Now, India also has recently come up with the National Policy on Software Products 2019 to promote software products which are manufactured in India. Now, coming to law enforcement, recognition of foreign judgments in India can only be done when after you file an execution proceedings or civil suit. So this is relevant for any kind of judgments that you've taken from, for example, a Swiss court. When you're forming your contracts, choice of law and place of jurisdiction should be critically analyzed and looked at with a very fine line, with a very thin line here. When talking about Arbitration and Conciliation Act, we have a very we have a very refined Arbitration and Conciliation Act with modern institutions that are available. And also there are transparent and comprehensible judgments. Now, insolvency and bankruptcy law has already been touched upon by the previous speakers. We have now legally defined timelines for completion of resolution process. We have thresholds to initiate the process. Anything and everything related to the judgments or about companies which are in the insolvency process is now available in public domain. So this is a transparency measure that is in place. And we keep seeing continuous legal processes and developments in this sphere. Now, with this, we move to labor laws. Now, there's an excessive drive here to standardize and streamline labor laws and regulations. Codification has been done in 4 categories. For where over 44 central laws are now being codified under 4 codes. Then we also have introduced model laws and regulations such as the Shops and Establishments Act, and we are seeing a continuous drive towards digitalization, wherein there is an ease of compliance drive that's underway, also facilitating ease of doing business and setting up of entities in India. So this is a broad overview of the legal update, and with this now I would like to hand over to my tax colleague Gaurav, who will take you through the tax vertical and tax updates on this.
Thank you, Ritika. So from tax perspective, basically foreign investor, when looking into India, they need to be mindful of 3 important things. One is the tax compliances which they require to be carry out in India and the cost of those compliances. Second would be the tax cost attached to their supply chain management or their model of business. So if you're talking about IT sector, captive unit, they need to keep in mind whatever if they would have a cost plus arrangement. So what are the margins which they need to keep in India to substantiate to the tax authority? So all these structuring and margins and the tax costs they need to keep in mind before they start planning an investment in India. The third portion would be the litigation, which is a common problem in India. So if they're planning for any tax position, so they should get their tax position wet, and what would be the comfortable position, what is accepted under the Indian judiciary and what is not. They need to take care of that. So basically initial planning before they actually invest into India, they need to take care of all these aspects. Now, as far as the tax structure or the legislative framework is concerned, it is very well structured, and it is as good as any European Union structure, which is divided into 2 parts. One is the direct tax, which is the tax on the income, and other is the indirect tax, which is the tax on the consumption. If I come to direct tax, there could be 4 prime pillars of direct tax. One is the Indian Income Tax Act, which provides for the rules of how you would compute your income tax and what are the compliances, what are the administrative provision, what are the powers of Indian tax authorities, and how will they check, what are the timelines to the taxpayer and the tax authority. Now, India also has a tax treaty arrangement, which is the bilateral arrangement to provide some beneficial provision. It has a tax treaty arrangement with more than 90 countries, including that with Switzerland, which provides for beneficial tax rates. As far as transfer pricing is concerned, India has its own transfer pricing rules and regulation, which are more or less like in align with the OECD transfer pricing regulation, and any foreign company entering into transaction with a related Indian party needs to take care of this transfer pricing provision. It also has country by country reporting requirement under the transfer pricing mechanism in India. Now, as far as the digital tax is concerned, because that will be important for IT sector, India has been front runner as far as the digital taxation is concerned, and it introduced equalization levy concept back in 2016 on the online advertisement. Now, in from 1st April 2020, it has extended the scope of equalization levy to all the e-commerce operator providing e-commerce supply of goods or services. So all the companies, specifically IT companies, when they're investing into India, they need to be mindful of what this equalization levy looks like. And it is more like a digital service tax, which is there in the most in many European Union nation. But the scope of Indian equalization levy, it's a little bit wider in the scope, so you need to be careful at that end. Now, from direct tax update side, the Indian government is working on three basic premise. One is to reduce the cost of any foreign investor to attract the investment. They have reduced the corporate tax rate, the base rate, to 22% from earlier 30%. And if you're a manufacturing concern, it goes further down to 15%. Indian government has also abolished a concept called dividend distribution tax, which was earlier applicable on the Indian company who is to distribute their dividend. Now, for foreign company, abolishment means that all the dividend income would be directly taxed in their hands. Thereby, they can avail the beneficial tax treaty rates at the rate of 20%, which was earlier at the rate of 20%. So there is a saving of 10%. Now, to attract the foreign investment in the form of loan, they provide for a lower tax rate of 5% as against 20% and 10% under the domestic tax law. Again, to reduce the tax litigation, they provide for option of advance ruling wherein any company can approach the tax authority and ask for tax implication on their proposed transaction in India. It also provides for mutual agreement procedure where you can involve the competent authority if you are facing any problem with the interpretation of tax treaty, or you can also obtain an advance pricing agreement wherein you can decide the price in advance if you are entering into transaction with a related party, and this will help you avoid any tax litigation from transfer pricing perspective. As far as physical incentive is concerned, if you generate any employment in India, the government also provides you an employment generation incentive under the Income Tax Act, which means that if you pay 100 euro salary to any employee, you get over and above 100 euro, you get euro 90 tax deduction in over and above the books recording, and you get that in 3 periods. So that means euro 30 in first year, euro 30 in second, and euro 30 in third year. So that was from the direct tax side. Now, if coming to the indirect tax updates, so India charges custom duty on any imports, and it from IT sector perspective, it has foreign trade policy. This is very important because if you are making in India any export of goods or any export of services from India to outside countries, you get certain remission of tax duties. So that is very beneficial in any IT sector, especially the captive sector. Can utilize this to reduce their tax costs in India. Also, last but not the least, we have goods and service tax, which Mr. Gupta has already covered. That it has unified all the state and central tax laws, and it is now one law which a foreign investor has to keep in mind. So it becomes very easy to capture and understand and analyze and make compliances under the Indian tax law. So this was it from the tax update side. I'll just hand over to Dr. Singh now. Dr. Singh.
Side. Let me now move on to Q&A session. So let me first invite the guest speaker of the day for a few questions that have been posed to him. Mr. Puri, can you switch on your camera? Yeah. Mr. Puri, a question we received is that what have been the major changes in the tech startup environment in India and its possible complementarity with Switzerland?
Okay. So a couple of changes which have taken place, and these are ongoing. One is the mostly the techs were going out of India to US, to Silicon Valley to really attract capital. So that has changed, where we have a lot of incubators which are available. Most of the premier engineering colleges like IITs and IIMs, they have incubators. Associations like ESC has incubators, and there is access of capital which is available by investors, angel investors and beyond within India. So it is creation of a platform which has happened. Second, the journal high decibel which the press, which the government, which the businesses are attaching to the startups is very important. Because earlier it used to be that the startups would always get compared, and the large companies would take it all. Today what's happening is that even if you have a niche and that niche is good enough, you get propagated to the front page of the newspapers and people know about you. So I mean, there are a lot of intangibles also which are happening in our industry, which are very good. So from vis-a-vis Switzerland, what happens is that there are a lot of startups and they are looking for capital, they are looking for idea, they are looking for partnerships. So when you have similar startups in Switzerland, so what happens is that they can put together, join together, create something more valuable. You may have startups which are doing so. If you see Facebook, WhatsApp, even for that matter, any software which is now reigning supreme, be it digital or be it social media or whatever, their base has been India. India is the testing ground for them. In India, today we have 800 billion people who are digitally connected. They may not have computers, but they have cell phones and they are connected and they're consuming this content, they're checking it out. So these are certain changes which have gone in, and it's a brilliant time to forge partnerships between Indian companies and Swiss companies.
Okay. Thank you. Thank you, Mr. Puri. There's one more question which you might like to take. What is the current status of data localization policy and its impact on foreign players?
Yeah, so data localization policy, you see, there are two types of data. There is, three types of data. So one data is, data which is available in public domain. So let's say if we do customer product catalogs, if we do websites, if we do brochures. So every company has some promotional material they want to promote as much as possible. So I mean, this is like in the open domain. The other is certain data which is like private data, but at the same time, it is not data which really needs to be protected, not the financial data. So the Indian laws are specific about the data which can cause harm, which is really needs to be secured. And that too, that is a very small segment where everyone is looking at for that to be hosted in India, and that is, I think, is a very positive move. So what happens is that if you do not have clarity, so you feel that every data has to be kept in India. But once you have the clarity, you can differentiate as to what is it which is needed to be always in India and what can be put out. I hope that answers.
Thank you. Thank you, Mr. Puri. Thank you for joining us for this webinar and representing the Electronics and Computer Software Export Promotion Council. Let me now move on to the next question, which is posed to our next speaker, Mr. Tarun Gupta. Mr. Gupta, the question, I just noted it down. Where was that? How has Indian IT industry evolved from cost leadership, which has traditionally been its main strength?
I think Indian ITS industry, cost leadership was definitely one of the main triggers, but we have also achieved certain milestones. One is service excellence, right? And third and foremost now is also scale. There are very few countries in the world which can, for a certain technology, have scale. And you hinted that India has world 75% of the digital talent. Yeah. And fourth is now we have already laid a foundation for working into new technologies. I spoke earlier about software as a services. We have AI and machine learning companies, correct? Now we have, and Dr. Mr. Singh spoke about a complementarity with Switzerland on blockchain. So as a country, our IT sector has evolved into digital, has evolved into new technologies, and not limited to only large companies. Also very, very high quality startups who have access to capital as well.
Thank you. Thank you, Mr. Gupta. With that, let me jump on to the next question. We are short of time. So let me now pose the next question to Ms. Ritika. Ritika Arora from Rotel Partner. The question is from an Indian national living in Germany and looking to collaborate between India and EU in the IT sector. And it says that if I'm a software engineer in Germany, what are the incentives I will get if I want to set up my startup in India under the MSME sector? My target destination will be Goa, and she would like to work in the field of software development. So largely also wanting to ask the incentives available in the manufacturing and IT sector.
Yes.
Go ahead.
So from an MSME perspective, as per the recent changes, as per the recent amendments, the investment and turnover limits have increased now. So depending on, so if it's a manufacturing or a services sector, then depending on your investment and turnover thresholds, you would be classified under one of those categories. Now, becoming an MSME in India has a lot of incentives. For example, there is collateral-free borrowings. There are some tax benefits as well. Other than that, you get some subsidies on patents registrations in India, some relaxations in ISO certification also, and there is protection for delayed payments. So what we have also done is we've prepared a detailed paper note on this, and we would be happy to share that, giving an overview of the various other incentives as well that are available. So yes.
So the question is posed to Gaurav, and so Ritika, I'm posing to you because I think Gaurav cannot join. It says that whether IT, hi Gaurav, yeah, here, whether IT services provided by BPOs or KPOs in India to overseas customers is subject to Indian GST. There were certain news articles indicating some controversy on intermediary services and some relaxation from government side. Can you please explain the issue and the relaxation? There's one more question again on GST. I'll add to it. Are there any corporate tax or import duty or GST benefits available in case of operations from Software Technology Park scheme in India? Any other regulatory benefits to them?
Thank you. Yeah,
you've got the question.
Thank you, Dr. Singh. So basically, if coming to the first question of related to intermediary issue, so that is something which is talked about topic in India as far as GST law is concerned. So basically, what intermediary is that if any Indian company is facilitating supply of goods or services for any foreign company, then any services that is provided by that Indian company to foreign company in terms of facilitation services would be subject to GST because that's an intermediary services. But if any company who's basically a separate unit and not a captive unit and providing export of services to foreign company, then GST is not charged on that. So we need to see whether it falls under facilitation services or not. And if it is a facilitation of supply of goods or services for foreign company, then GST would be applicable. I'll give you just small example that a foreign company is trying to sell goods in India and it has set up an Indian entity to carry out marketing function for the foreign company. So this Indian company is working on a cost plus model and providing services to foreign company to explore the Indian market. So that can be said that it is an intermediary function because it is facilitating the supply of goods of foreign company in the Indian market, and therein the GST could be applicable. But if it is a direct supply of services to a foreign company, then this intermediary concept does not hold good, and in that case GST is not applicable because that's export of goods or export of services from India to abroad. Now, as far as the STPI is concerned, there were earlier a lot of exemption or the tax holidays provided under the income tax law as far as the corporate taxations are concerned. But now they have introduced the sunset clause, and from 1st April 2020, no such benefit is given if you are investing now in India. So that corporate tax benefit has been taken away. But as far as the GST or the custom duty is concerned, yes, there are still benefit available from custom duty and GST perspective, and one need to understand the supply chain and the approval requirement before taking those positions.
any relaxation to IT services if they are intermediary? Any relaxation to IT services
Okay,
if
so
they
there
are
is no
intermediary?
clarity as such on if there is any sector who's taking care of or supplying services outside India. So we need to see what kind of services are being provided and how foreign companies taking advantage in India. So we need to see the entire supply chain model and the model of business to understand if it falls under intermediary services or not. But having said that, there are now mechanisms wherein you can present the entire model to GST authority for getting an advanced ruling on tax implication to get a better clarity on the subject.
Mhm. Thank you. Thank you, Gaurav. With that, we come to the conclusion of the webinar. All the presentations that we displayed today would be available on our website, missp.ch. We'll also be converting this webinar into a videocast and podcast, and we'll be releasing. I hope that we have been able to reinforce the idea that there are lots of complementarities between the Indian and Swiss business ecosystems. We're also doing another webinar on the information technology enabled services sector later in the day at 2 p.m. Swiss time. I would urge and request all of you to join us for that. It would be equally interesting. And to end, let me thank all the presenters we have today with us, including guest speaker Mr. Puri for joining us today for making this webinar so successful. Thank you. Have a good day ahead.